The Right Path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mic. Sorry, hot mics.
Welcome to the show. Welcome to the show. Oh, this is going to be a good show today. This is a big see, I told you so. Actually, it's I told you so. If you guys listen to Rush Limbaugh, he says that all the time. This is a see, I told you so moment where he makes a prediction and then it comes true and then he goes back and he plays the exact quote and then he talks about how it came to fruition. Today is a huge see, I told you so. I told you guys this was going to happen. I told you over and over and over and over again. In fact, one of these predictions I've been making for nearly 2 years. And there's about 3 articles just this morning that popped in all the major news outlets that this is absolutely happening. So yesterday, before our event in Sugar Land, I got a text message from Ryan, who manages our passive investor network. Yes, we're building a passive investor network. If you want somebody to go out there and find you all the deals, put the numbers together for you, help you with the financing side, finding the right contractor. Of course, we just use Fast Track, so that's pretty easy. But in any case, we've got a guy in office now, in-house, that does all this on behalf of investors who want to build passive wealth. So Ryan shoots me a text, and he's like, you got to see this article, man. And I look at it, I'm like, you have got to be kidding me. So it is a huge See, I Told You So Friday. Here's the important thing to keep in mind. And there's really 2 reasons why we do this. One is there are so many people out there that make predictions and then they never come true. So you never get to know, well, if the things they're talking about, do they ever come to fruition? Does their expertise and their prediction in that field ever really occur? So go beginning of the year in January, tail end December into January, there are a ton of real estate clubs all across the country that do a market update and market predictions for 2018. And I go to like every single one of these. I'm an invited presenter, or I'm invited to sit on the panel. And I do as many of them as I get invites for that I can schedule in these days. And the amazing thing to me is nobody ever goes back and revisits their predictions. In fact, you can go on YouTube and see my predictions for 2016, I believe 2017 as well. So 2 reasons we do this. One is to show you that what we talk about on this show is right. That's incredibly important. The information that we are giving you guys is right, especially as it relates to the market. The second reason we do this is because it allows us an opportunity to update you on the newest techniques, the newest analysis, and the newest ways to buy houses and build wealth with real estate. You've heard me talk about this before. The market changes about every 90 days. Now, real estate changes very slowly. There's not these big like whipsaw actions like you see in Wall Street, where one day bankers are jumping out of windows and the next day they're, ordering new Ferraris. It's not that fast, but you can have some level of prediction. And you also need to change some of the things you're doing. One of these things I shared with our folks last night at our event. You could start buying houses on MLS again. I bet nobody knew that. Of course, if you weren't in this business, maybe you would know that. So let's talk about the 2 really big See I Told You So's for today's show. One is an article, and if you're watching me on Facebook, I've got the title of the article behind me on the green screen. Housing sees first post-Harvey dip. Housing sees first post-Harvey dip. Now, I'm not so in line with the title. However, there are so many nuggets in this article that I'm going to spend pretty close to the next hour explaining where we made a prediction, where it's coming to fruition, or some of the analysis that's in this article is dead flat, 100% wrong. I worked for a guy named Bob, and I worked for Bob for about 12 years. And one of the things Bob told me when I got hired there, he said, look, here's the deal. I'm going to teach you how to speak, meaning I'm going to teach you how to speak on stage. I'm going to teach you how to read. And what he meant by reading is I'm going to teach you how to read something and to give it a critical review. That's really what he meant. You're going to be able to analyze the article and then compare that to your own experience and your own data and come up with your own summary or analysis of the article. Second thing he says, I'm going to teach you how to write, meaning how to write professionally. So we're going to use those skills here today on the radio show. So let me dip on over to this article here. Article is titled, Housing Sees First Post-Harvey Dip. It's in the Houston Chronicle, written by Nancy Sarnoff, if I'm pronouncing her name correctly. And I'm just going to read, we're just going to go line by line on this thing, because it's just, there are so many juicy nuggets in this thing that I could teach an entire weekend retreat off this thing. In fact, the next weekend retreat, we ought to go ahead and pull this and drop it somewhere in a presentation, because I'm going to pull this up on stage and we're going to have a discussion about it. In Houston's housing market, the Harvey effect is wearing off. Home sales fell in March for the first time since last year's hurricane, a new report shows. Single-family sales were off 2.5% in what is supposed to be the kickoff to a busy spring sales season, the Houston Association of Realtors reported Wednesday. This is where we start to get into some troubled waters here. Hurricane Harvey provided a boost to the housing market as displaced Houstonians bought replacement homes and investors scooped up flooded houses to flip or rent out. Employment and sales taxes also saw gains in the months after the late August storm. Let's stop right there. There are some stuff in here. There's some very large, erroneous assumptions here. Hurricane Harvey provided a boost to the housing market as displaced Houstonians bought replacement homes and investors scooped up flooded houses. That's not correct. Let me tell you what actually happened. There is a great chart that the guys over at Real Estate IQ put together. And what the chart shows is the number of houses that went under contract before Hurricane Harvey hit, and then it shows how many properties fell out of contract post-Harvey. Meaning, I had a house under contract, Hurricane Harvey blows into town, most of these houses were under contract via an option period. The buyer then executes the option and terminates the contract to buy the house. The question is why, and that's multifold. Why did that happen? One is the house may have been damaged. Two, the neighborhood may have been damaged. Or three, the buyers just said, you know what, we're going to wait until this Hurricane Harvey stuff kind of falls out over the next 2 to 3 months, then we're going to look at buying a house. In reality, it was pent-up demand. In other words, Harvey came in, smacked Houston in the face, and it hit us so hard that all of the buyers in the market stepped back and said, whoa, 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 we're a little stunned here. Let's step back a second, and let's just chill here for a minute until we can get our wits about us. That was a lot of what happened after Hurricane Harvey. If you look at the number of houses that were damaged relative to what was on the market, we're only talking, I would have to look at the sales data. It can't be more than 2,000 or 3,000 houses that have been sold on MLS that were damaged by the storm. It's not a lot. And when you consider that we sell nearly 10,000 houses a month in Houston, 2,000 or 3,000 houses over the last 6 months is statistically irrelevant.
2 minutes.
So that's what's really going on in this first statement. Oh, there was this Hurricane Harvey boost. Not really. There were a lot of a lot of buyers that were already in the market, or buyers that were about to get into the market, or sellers that were about to get in the market who would also consequently be buyers. And when Hurricane Harvey blew into town, all of that stopped for a couple of weeks. And that was just enough to slow some of those purchases down. And now things are starting to kind of get back to normal. Wasn't necessarily that Hurricane Harvey, because of the storm, there was all this extra demand for property. That is not the case.
1 minute.
A lot of that demand just slowed down and then kind of picked back up until it caught back up to the normal demand that we saw before Hurricane Harvey. Here's the other thing I'll tell you right before we go to break, and that is what I heard from Dr. Dotsauer about a month and a half ago, and that is we were in a recession. Houston was in a recession until about 6 or 7 months ago, which was right around the time Hurricane Harvey hit. So the problem is statistically, you can't tease out the data to say what is Hurricane Harvey versus what is part of our natural economic cycle. So don't believe this whole Harvey created all these sellers and buyers. Now, I don't believe that to be true. When we get back from the break, we're going to cover more of this article, Housing Sees First Post-Harvey Dip from the Houston Chronicle. This is Jason Bible, Right Path Real Estate.
Mike's off.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. jennifer.legacymutual.com or call 713-579-3611. Again, jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, hot mics.
Jason Bible, Right Path Real Estate. It's a big C. I told you so Friday. I'm telling you what, guys. I told you some of this stuff was going to happen, and now it's all coming true. Before I go back into this article about post Harvey dip, I want to talk about loans, lending, and interest rates real quick. There are 2 articles that came out today. May have come out late yesterday. Let me see here. Oh, I've got my ad blocker on, and CNBC doesn't like that. Oh. It says something. Oh, here we go. Subprime mortgages make a comeback with a new name and soaring demand. Published 23 hours ago. Updated 20 hours ago. Here is what I predicted 2 years ago. As interest rates rise, lenders are willing to take more risk. And what is risk to a lender? A lender has 2, let's say for lack of a better term, assets they're evaluating. The borrower and the house. By the way, this is going to sound very familiar to you, to those of you who are private lenders. Whenever I teach a private lender training, this is going to sound very, very familiar. You've got to evaluate what that house is worth. You've got to evaluate actually what it's going to be worth in the future. Then you have to evaluate the borrower. Do they have the ability to pay you as the lender? Here's what's fascinating. As interest rates rise, lenders are willing to take more risk. And here's this article. Oh my gosh, subprime mortgages are back. Yes, they're going to be back. As interest rates rise, more buyers of houses will enter the market. This is the last leg of a cycle. Because here's what will happen. Interest rates will rise. New buyers will enter the market because lenders are willing to add more risk to their portfolio. Then there will be an economic downturn. Those same lenders will start taking houses back. And then we start the cycle all over again. Now, the question is, how long does this cycle last, Jason? I don't know. Depends on how many subprime mortgages they lend out. Subprime, by definition, means less than A grade. And it's the subprime stuff that's always the problem. Think about it from a lending standpoint. Are you worried about he's a physician, she's a corporate attorney, they make $400,000 a year, and they're buying an $800,000, $900,000 house in Memorial, or a $1.2 million house in Memorial? Are you worried about that couple? No. They are prime, A-grade borrowers. They make a lot of money. They've got 800-plus credit scores. They've had 800 plus credit scores since they paid off their student loans 3 years after they graduated, or they didn't have any student loans to begin with. Those, and they've been in their respective careers for 15 years. Those people are easy to lend to. And even in the worst of times, if one of them loses their job, they got plenty of money from the other job to cover their monthly note. They've got a lot of savings. They've got plenty in retirement. The likelihood they default is almost 0%. Versus brand new homeowner, wannabe homeowner, that household income is $80,000 a year, that has student loan debt and credit card debt and all that other stuff. If you've got a choice as a lender, who are you going to lend to? Well, it's real simple. If interest rates are low and my return is small, I'm going to go after the largest number of A-grade borrowers I can in great neighborhoods. So as interest rates rise, lenders are going to begin to lend to folks who've got less than stellar credit. In fact, if you want to know where the next defaults happen, it's typically in new construction. And the question is why? Because builders give so many incentives for those people to get in. And a lot of them, quite honestly, can't afford it anyway. That's why you see a lot of foreclosures and short sales 3 to 5 years after a new neighborhood opens. Hint, hint, for you guys that want to go after sub-2 deals, which as a marketing strategy is horrible, but I get it. There's a guru out there. Actually, there's 2 gurus. One's in town this weekend that teach this nonsense strategy for building wealth. Go buy houses and take over payments. The places you should be doing that are in new construction neighborhoods. There's a bunch of them in there, trust me. Every 3 to 5 years, the default rate jumps in those neighborhoods. So as interest rates rise, more borrowers are going to be in the market. Now, here's the common mistake I see. And I'll tell you this right now. Whenever I hear conventional wisdom, it's 99% of the time wrong. Here's the conventional wisdom. Well, as interest rates rise, there are less people that can afford homes, and the prices of homes are going to come down. That is absolutely, unequivocally not true. It is false. Here's what happens as interest rates rise. Let's say someone is maxing out their payment and the house they can afford is a $300,000 house. Interest rates rise half a point. So they can no longer afford that $300,000 house. Well, then what's the next best choice? The $275,000 house. Here's the problem. As interest rates rise, demand does not stay stagnant because more lenders are willing to lend to people who have less than stellar financial portfolios, less than stellar credit and cash and stable jobs. So what ends up happening is that family that could afford that $300,000 house bumps down to $275,000. However, there's a whole flood of new buyers that enter the market that maybe they can afford that $300,000 house at a higher interest rate, but because of their lending profile, they're not grade A borrowers, and they couldn't afford that house from a credit standpoint. But now they're in the market. What ends up happening is this starts to place an inordinate amount of pressure at houses around the median home price. And right now, median home price in Houston's, $230,000, $240,000. This actually, it places a tremendous amount of pressure on houses below $200,000. You thought that market was on fire now? Oh, just you wait for the next 8, 10, 12 months. It's going to look ridiculous. There are going to be buyers coming out of the woodwork. It's going to blow you away as long as interest rates are allowed to rise. That's something we've been telling you folks for the last 2 years is going to happen. Here is what happens to multifamily. This is where it starts to get real interesting. As interest rates rise and there are more buyers that can afford to buy a home or whose credit profile has changed and now they can get a subprime loan. Let me ask you guys a question. Where do those people live now? A lot of them live in rental houses, but a lot of them live in apartments. So what happens to all those multifamily units that are $1,200, $1,300, $1,400, $1,500 a month rents? These buyers start looking around and they go, wait a second, I can afford to get a house now. You know, I had that student loan debt that we got rid of finally. I've got a bankruptcy that's finally off my record. I have a foreclosure from 2010 that's off my record now. And now I can go in and afford a home again. Honey, we can move out of this apartment or this rental house. As interest rates rise, more buyers, more people choose to be homeowners than renters. You are going to begin to see occupancies. Two things will happen. You'll begin to see occupancies and rental rates flatline or decline. You guys might want to go back to the show I did last week because there's a little statistic I shared with you guys, and that is lease rates are flat in 2017. Lease rates are flat, meaning people are not moving into apartments. They're starting to buy homes. We're starting to see this cross point. And where these two lines cross, single family and multifamily are what's known as counter-cyclical assets, meaning when multifamily is at a high, typically single family is at a low, and vice versa. When single family is at a peak, multifamily is in a trough. I can tell you unequivocally, and anyone who is honest about multifamily for the last 5 years,
1 minute.
It's at a peak. Is it at the very top? I don't know. It has never been higher. I can tell you that unequivocally. It has never been higher in the history of multifamily in the entire state of Texas. Has never been higher. And if we know single family and multifamily are countercyclical, then that means single family hasn't even come close to hitting its peak yet. However, as interest rates rise, it gets more expensive to borrow money to buy multifamily, but that also means lenders are willing to lend to single family homeowners who may not have less than stellar credit profile. They will not be renting apartments and homes anymore. They will be buying. We get back from the break. I'm going to go back and talk more about this post-Harvey dip, but I wanted to give you an update. The second Big C I Told You So today on interest rates. The articles, it seems like, all came out in the last 24 hours. So, guys, y'all get ready in single family. It's about to get a little crazy here in Texas. It's Jason Bible, Right Path Real Estate.
Mike's off.
Real estate investors, if you're not familiar with Quest
Morning,
IRA,
Ivan.
let me tell you what you're missing. We've got free weekly
Richard, you like that?
educational
That's
classes,
natural hair.
networking opportunities, and the ability to tap into trillions of
Like all the
dollars
millennial
for real
kids try and
estate
like
investing
spike it
deals.
all up. I'm
Come
like,
by
I've
our
had that
office
hair
or join us
forever.
remotely as we simulcast all of our educational classes every Tuesday morning and evening.
Morning, Daniel.
For more information, call us at 1-855-FUN-IRAs or
Ooh.
visit our website at questira.com.
Are you a realtor or seller that is concerned
right.
about the new TRID rules and closing on time?
Go back.
I'm Jennifer Hernandez,
to
Senior Loan Officer
this
at
here.
Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisal. Next Gen is a group of appraisers
Robert, like going back in a time machine.
We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market.
Yeah, so Richard, I'll have to find that article. Man, where was it? If you go back on my personal Facebook page, I know I put a link to it. But what's fascinating is you see an uptick in occupancy right after Hurricane Harvey.
Are you ready?
Yes, ma'am.
All right, here we go. Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Got a couple of comments in here. Ivan, you are certainly welcome about the changes to your marketing. Getting some interesting comments here. Robert out of California. You guys know Robert of JB Fund Services. He said it's so much fun in Texas, let alone Houston, where you can buy houses to rent and you can do flips. He said it was like California in 2012. It's like going in a time machine. So it is fun. This is a really fun market to be in. We are having an absolute blast. It's almost as much fun. 2018 is going to turn out to be, for us, like 2016 was. 2016 was a lot of fun for us. And even 2015. 2018, I think, is going to be a real fun year for us on the house buying side. All right, I'm going back to this article, Housing Sees First Post-Harvey Dip from the Houston Chronicle. The slowdown surprised the Realty Association, which further cited national and global economic concerns as possible culprits for the weaker market. It's possible that consumers are hesitant to buy in light of recent stock market volatility and the looming trade war with China and how that might affect their personal finances. I have no idea where that's coming from. You talk to the average buyer and ask them what the impact on their personal finances are going to be from a global trade war with China or volatility in the stock market, and they'll look at you like you're insane. Like, what does that even mean? Are you speaking to me in English? Does anybody really? Let's talk about trade real briefly. What's the first thing any country does when it starts to create wealth? It's the first thing they do. Most will get this wrong. The first thing any country does, a developing nation, that starts to build some real wealth, they buy food from the United States. I'm going to say that again. The first thing a developing nation does as it starts to become wealthy is buy food from the United States. This is why, if you guys go all the way, now this is really hard to discern because when I talk about Trump and I talk about politics, people go absolutely bananas and their brain gets removed from their head and they punt kick it a mile down the road. I don't know. People cannot separate politics from emotion right now. It's amazing to me. But if you notice, the most vocal group after Trump said we're not playing games with China anymore was the agricultural lobby. Why? Because we sell gazillions of dollars of food abroad. The first thing that starts going out the door to a developing nation when they're creating wealth is they buy our food. Do you really think we're going to have a nuclear war with all these countries around the country or around the world that buy our food? The answer is no. This whole like everybody gets scared and you're going to have to sit on your desk is utter nonsense. Stop watching TV. Stop reading the liberal nonsense online. We are not going to war with anyone who has any real power. Trust me. We will win. It's that simple. Send your nukes. We will stop feeding your country. Let me know how that works out for you. Because in about 2 weeks, your country will collapse. By the way, most countries can't make gasoline and diesel either. Good luck with that, bro. We don't need nuclear weapons anymore. We really don't. I mean, I get it. They're deterrents. All we've got to do is stop the supply chain. This world will come to a screeching halt. Trump can tell China whatever he wants. And of course, the liberals are going, oh my God, there's going to be a nuclear war. No. He could tell China, we're not buying any more of your $2 flip-flops from Walmart, and that country will collapse. What are they going to do to us? Not make iPhones? Guess what, guys? Did y'all know Apple makes product? They have a facility in Austin, Texas. That's where they make their Mac Pro, their $10,000 desktops. You're telling me we can't whip up a couple of factories here in the United States to take care of the needs for the American economy? I'm calling BS right now. Do not believe this stuff you read about the trade war. It is utter nonsense. You go back to the Founding Fathers, really interesting discussion about nationalism. The Founding Fathers were so sharp, they knew that if they allowed open trade, that the United States would be little more than an agricultural subsidiary to Europe. They knew if they didn't build their own economic base where consumers inside the United States were building an agricultural and industrial base, we would never become a world leader. Never. What happens to you? What do you think happens in the Middle East when we're done buying oil from them? They're not going to become a tech center. I can tell you that right now. The brilliant tech people are here in the United States. We use a subcontractor to build it overseas, but all the talent is right here in the United States. Do not believe this trade war nonsense for 1 second, and it's going to have this huge impact on the economy. Trust me, nobody's making buy, no buy decisions on a personal residence based on what Trump tweets about China today. That's absurd. Stop watching the news. It is literally making us dumber. I'm dead serious about that. Step away from this nonsense. It is getting worse by the day. I cannot believe this quote made it into a serious article about investing in real estate. It's awful. It should have never made it in here in the first place. Go ask all these people buying houses, hey, what do you think of the trade war and what is the impact on your personal finance? They're going to go, what? What are you talking about? But if you watch the news, oh, the market moved today because of the expose on Stormy Daniels. No, it didn't. That's absurd. It's offensive to people's intelligence. It's even worse that this stuff gets reprinted. Stop watching the news. Higher mortgage rates also may be spooking would-be buyers or pushing them to act. The average rate on a 30-year mortgage is 4.4%, up from a low last year of 3.78%. Okay, this is absurd. Run a 30-year mortgage calculation on a $250,000 house from 3.78 to 4.4%. I'll go ahead and do the math for you because I did it before the show. You know the difference in monthly payment between 378 and 44 on a 30-year fixed? It's $90 a month. If people are like, well, I don't want to buy a house because it's going to cost me more $90 more a month. That is absurd. In fact, a realtor or whoever is a real estate professional that's advising you when to buy a home, interest rates literally do not matter below 7%. It's free money below 7%. What's inflation right now? 5%? Now, the official inflation is 2.5%, 3%. I think it's 5%. Anything below 7% is free money. And I could do that calculation for you if you want. We can run a little net present value calculation. It's real simple. I got a report. I shared it with the folks at the event last night. Texas is appreciating 7.8% per year. And you're worried about $90 a month more on a payment for 30 years, and we're experiencing on average 8% a year appreciation? Whoever's advising you on when to buy a house has no clue what they're doing.
2 minutes.
If you're a homeowner, listen to this show. If you're not an investor, you're a homeowner, you've been thinking about buying a house. I'm going to tell you right now, go buy one now. Right now. Right now. I want you to call Jennifer at Legacy Mortgage and get you pre-qualified for a mortgage, and I want you to go buy the house that you want right now. Especially if it's below $500,000. Go buy it right now. The longer you wait, the more expensive that house gets. In fact, it's appreciating. Let's take a $500,000 house. If it appreciates 10% a year, that's $4,000 a month. That house is appreciating $4,000 a month. And you're worried about a payment that goes up by less than $200? Man, we have gotten so bad at math. You guys need to step away from the news. Stop reading the nonsense and start getting real smart with math. And the math ain't even that hard. You can go on here and run a calculation. All the calculators are on Google. You don't even need a calculator or a phone. Just go to Google. If you're a homeowner that's listening to this show right now, you need to buy the house that you and your wife want today. Do not wait. Do not listen to the drivel and the nonsense that's coming out of some of these places. It makes no sense. We get back from the break. I hope I can finish this article today. It's Jason Bible, Right Path Real Estate.
Mike's off.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal.
Resign
like
your
that.
position as pseudo-world ruler and focus on creating wealth for your family. That's great. Oh, Robert, I'm thinking about doing a post.
They know what you need and when you need it.
And it's going to say entrepreneurship with a big red circle and an X through it.
Bundling your properties on a single
And I'm going to tell people they need to step away from entrepreneurship and get into investing. And I want to do a whole thing on why those two things are completely different. I had that thought this morning. I'm working through it right now, but
can do for you at 281-569-4353. That's 281-569-4353 or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353 or online at benchmarkbroker.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree, single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you.
Hey, Nikki, how much time do I have?
And give you feedback on value, cost of repairs,
1 minute.
and potential loan amount.
90 seconds.
Jet Lending is your fast and friendly
I don't think I can
hard
get
money
coffee
source
by then.
for first-time investors.
I need to put, you know, we always had this idea in our studio that we'd have like a little coffee or tea station, like literally right off camera.
You should do that.
Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while
Oh, that's it.
This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis.
All right, Andy, if you're listening, it's a Joby, Joby. I'll see if I can find it. You can't see that. They make this with a clamp on it.
This is Business
All right.
1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. We're going to have to make this into a twofer. I'm going to have to do this Monday, too. I'm not going to get all the way through this article. I'm not even halfway through it yet. And I'm busting some of the myths, and I'm verifying some of the truth. Here's what I'll tell you. If people are telling you, don't buy a house because the trade war and the volatility, most people don't even know how volatility is measured. but they're telling you not to buy a house because the market could be volatile. That has nothing to do with real estate. Do y'all realize the economy has absolutely nothing to do with what happens on the stock market? Was that a shock to anyone? The market, the stock market has nothing to do with the economy. Absolutely none. Zero. The stock market is not a reflection of the economy. Now, are there elements of the economy in the stock market? Absolutely. Some companies do better when the economy is roaring. Other companies do better when the economy is tanking. All of that gets mixed into the capital markets in your portfolio. So it's a horrific barometer for how the economy is doing. In fact, one of the scary things is, if you look at how much corporate debt has been issued since 2009, you'll realize that if there is any little hiccup in the economy, the market is going to be in a world of hurt because their margins have been squeezed for decades. And if you don't believe that, go to Dark Bid right now, dark-bid.com right now. There is a whole article he wrote on corporate returns for the last 50 years. Corporations are providing less economic value every single year. Then when you add in what the price of their equity is, the amount of money they actually make, the price to earnings, is absurdly low. The prices are way too high. Their earnings are not that great, and yet we keep buying more of this stuff. I think a global trade war would be great for the United States. Do you know why? Because we will win and win big. I sat across from two ladies last night, and they were sharing with me how many Asian buyers they were working with.
2 minutes.
Chinese real estate investors, they do not invest in China. They invest here in the United States. They've been scared of China for the last 5 years. And what do you think they're going to do in a trade war? Do you think they're going to not invest in the United States? That's utter nonsense. They're going to pour trillions of dollars into real estate in the United States, and a lot of that's going to end up in Texas. A trade war would be great for this nation. It'd be phenomenal for Texas. It'd be absolutely exceptional for Houston and Dallas. People know who's going to win that battle. And I can tell you it's this country right here that's going to win. Bar none. All the value comes out of this country. Period. All the real economic value comes out of here.
20 seconds.
I will be on the show Monday morning. I'm going to continue with this article. We're going to go step by step. My opinions I've shared in the past. We're going to talk more about housing and Hurricane Harvey and interest rates and all that fun stuff. Have a wonderful weekend, folks. Go out and buy some houses. Trust me, the water is just fine. Buy as many as you can get your hands on. This is Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
Great, thanks.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at rightpathrealestate.com.
This is a special notice to all U.S. taxpayers. If you owe the IRS or state back taxes and cannot afford